Hello and welcome to the podcast. We have a monthly contributor back with us, Mr. Bill Holter, which we're always honored to have. And we're going to get his insights on all things financial and somewhat geopolitical as well. So if you're new to the podcast, please do like, subscribe, and share so that others can gain in the knowledge that you are being afforded. As you know, Bill has over 23 years experience as a stockbroker, was a branch manager for 12 years, and has many, many years of precious metals experience and does his clearing through our fellow contributor, Miles Franklin, and has his own website, which gives you his own financial and geopolitical personal insights, which can be found at billholter.com. And we're honored to have him back once again. Bill, how are you doing today?
Hey, John. Thanks for having me.
Thanks for being here. We appreciate your time. So, Bill, first question for today is, as you are well aware, there's a significant global economic shift happening, specifically the movement of precious metals from London to COMEX and nations repatriating gold to protect themselves from financial instability. The vaults worldwide can't even pay on the gold demand for physical fast enough, not to mention the demand on silver. Have you ever seen this before in your career? And what does this mean to you for the inevitable spike in the price of gold and silver?
No, I've never seen anything like what's going on now. Uh, I was in business from 1983 on. So, I didn't see 1980, 1979, 1980, but I've never seen since then, I've never seen anything like it. And frankly, what you're looking at is you got the BRICS being formed. You have Trump threatening individual BRICS nations if they join, they're going to get 100% tariffed. Uh, this is the reset. It's a reset. I don't know if it's the reset. Uh, I think the final reset is going to be done by Mother Nature. It'll be done naturally. Um, but you've got nations scrambling for their gold. They want their gold within their borders, and that's a function of what uh, the Biden administration did with the 300 billion of Russian treasury reserves. Countries want to make sure that their reserves, that their capital doesn't just get, you know, taken, poof, gone away.
Hmm. No, I agree with you. I think this is one of the iterations of the bigger overarching reset. That's a micro part of the reset, if you like. And certainly, I've never heard of anything like this. I was curious to get your take on it. And I'm just going to show you a slide, Bill, real quick, just to get your impressions on. This is from Kobisi letter. We were talking about the physical gold buying, three largest COMEX vaults, and so on and so forth. You can just see the trend that's going on. To your point, so it's certainly, from what we can see, seems unprecedented. Next thing I want to ask you is Berkshire Hathaway, interestingly enough, vis-a-vis Warren Buffett, of course, reduced his holdings in U.S. Bank of America and Citigroup shares in the first fiscal quarter of 2024. The move disclosed in a regulatory filing on Friday. This comes as Buffett continues to trim Berkshire's stock portfolio, favoring safer investments such as U.S. Treasury bills. Berkshire slashed down, I think, three-quarters of its position to Citigroup, selling about 40.6 million shares valued at over 2.4 billion. The firm also continued to loan shares to Bank of America, which had previously owned about a 13% stake, being its largest shareholder in the last 2 years. So I guess the question is, what does this signal to you in terms of what's coming for the global melt-up and the bust in the economy? And notwithstanding that you don't have a crystal ball, when would you see this most likely taking place?
The when part, I don't think anybody can tell you, but I think it's pretty easy to ascertain that Warren Buffett he's cutting his. First off, let me say I'm surprised that he took stakes to begin with. I
Mm-hmm.
think what he's looking at, potential of derivatives blowing up, and does not want to, have big positions in banks that have large derivatives exposure. And he's the one who termed or coined the phrase derivatives being weapons of mass financial destruction. So, he obviously understands that end of it. I don't know why he bought shares in the first place, but you have to imagine that the reason that he's cutting the bank stakes is because of the derivative exposure.
I mean, yeah, you would think so. And I was a little surprised also, Bill, that he would go into treasury bills, given how upside down that marketplace has been. And it would seem that he knows what's coming. And, you see these guys make these seismic moves. It's because they know the bottom's about to fall out. So that's why I was kind of wanted to check with you on. I want to show you a slide here, Bill, regarding BlackRock. Recently, they acknowledged that nothing can stop the economic momentum that precious metals and commodities are having in the world markets. So I was wondering, Bill, what role do you see BlackRock playing in the global reset, and how much of a stake in this do you imagine that they have?
I'm not sure what role they're going to play in the reset. I can only imagine the role that they'll play uh, during the reset and the aftermath of the reset. I mean, their MO basically is to pick up all the broken pieces for, literally a few cents. So I mean, obviously, the reset is going to break some parts or some markets, and there's going to be pieces all over the place to be picked up, and that's what BlackRock does.
Yeah, yeah, it seems like there's more of that story, Bill, that meets the eye. I'm not convinced that Larry Fink is solely in control of this. There's some other factions behind him that might usurp what. Hmm?
No, he's not totally in control of it.
Yeah,
He's got strings attached to him, and he's got a puppet master himself.
exactly. So I'm just kind of curious, thinking out loud, like who's running him and what their ultimate plan is. Uh, Meanwhile, President Trump and the Fed, as you know, are having an all-out, for lack of a better term, pissing contest with the interest rate wars. He wants them to lower them, whereas they want to raise them or keep them status quo. At the same time, he's using reciprocal trade tariffs in order to level the playing field in trade and commerce. How do you see all this playing out if the Fed continues to pause or try to raise the rates? Can President Trump dump the blame on them as the reason to dissolve the Fed entirely?
Uh, it won't surprise me if he really does try to dissolve the Fed. I mean, how could you be surprised by anything proposed with what's happened over just the last 3 weeks?
Mm-hmm.
I mean, it doesn't, or 4 weeks, whatever. Uh, so I mean, you shouldn't be surprised that anything comes forth. As far as raising rates, lowering rates, I mean, the bottom line is uh, the debt is not payable, and of course now they're talking about revaluing gold uh, to the current price of 2,900 and change. That doesn't even create $800 billion, and the on books debt is 37 trillion. So you're talking 40 times the size of this new nest egg of gold that they're going to revalue, and that doesn't count any of the off books uh, debt or guarantees, which the total comes to over $200 trillion. I
Mm.
mean, just to back the current debt of 37 trillion, you got to be talking about, I don't know, 130, $140,000 an ounce. And that's just the on books debt. That's not, funding the shortfalls in Medicare, Social Security. It doesn't address the loan guarantees that we have outstanding. So you'd have to be looking at an astronomical number. I mean, 140,000 is an astronomical number. I can remember, I think it was 7 or 8 years ago. I simply did the math as to what the gold price had to be to pay off the debt, and people thought I was nuts. But here, you've got mainstream media talking about it. So I guess the corner that I saw around 7 or 8 years ago, that corner is now here.
Yeah, and I remember, Bill, in the past, you and I in podcasts previously have talked about this many times, that you had thought mathematically, statistically, from what you saw, the real debt was somewhere between 263 to 300 trillion. I can't remember if it was IMF or another group said it was probably 317 trillion. So it's much higher than what is being reported, because we know the numbers are all fake, phony, manipulated. So it really be curious to see, Bill, how, and they've bought up gold at such a low rate, as they suppressed it down with paper. I'd be really curious to see how high they actually let gold run, to what price point.
in a reset, or what they're talking about doing, it's not a question of letting gold run. It's forcing gold, the price of gold, to a number that they want. And like I said, I don't understand really uh, the thought process here, because I mean, even if you, like I said, if you revalued it $2,900, you're getting less than $800 billion, which is, I mean, it's, you know, what's that number? 3%? 3% of the debt outstanding. I mean, that's not going to put a dent in anything. It's not going to change anything. Um, the only thing it would do is it would put a floor, if you will, uh, in on the spot price. So, people could purchase gold and not even worry about pullbacks in price.
Yeah, maybe I don't know, maybe that's part of the plan. I guess we'll have to see how that plays out. I've
I
heard,
highly doubt, I highly doubt that that's part of the plan.
okay,
I can't see them revaluing gold to the current price, and then that just stays and gold floats from there. You don't get movement, you don't get things like this happen, but once every, I don't know, 30 to 50 years. The last one was August of 1971,
mm,
and the previous one before that was back in 1933. So
mm,
I, you've always heard, don't let a good crisis go to waste. Well, if they only revalued gold to $2,900, it wouldn't do anything. I mean, it wouldn't change the world at all. And what did they accomplish? They really don't accomplish anything. So it's my opinion, you're going to see at least two or three multiples of current price
mhm.
is where they want this to be. And I think it could be many more, much more than that.
No, I agree. I was going to say, Bill, to the back to what you're just sharing, whatever rate that they've got in mind, the price right now is probably modest compared to where it's going to be. So it's a good time to get it while you can, as you've said before. So um,
Right.
I've heard it said that Bill, that BRICS or some other nation suddenly backed their currency with gold, that it would be tantamount to a declaration of war against the U.S. and our government would have to send in troops to defend the dollar. Is it important that President Trump backs the U.S. dollar with gold before BRICS or some other nation? And do you see that happening?
Um, I I don't really see this as the U.S. Uh, backing the dollar with gold. All it would be, and don't forget, we got an audit coming up. So let's find out, A, if the gold is still there, and B, more importantly, the gold could be there, but there could be 100 claims on each, 100 contractual paper claims on each ounce. So, let's see what happens with the audit. Uh, BRICS has proposed backing their currency with somewhere between 20 to 40% of gold. Now, that does not mean it's going to be convertible. No currency is going to be convertible to gold, because these governments understand that when you make it convertible, it converts, and they lose their gold. So I don't see a convertibility clause anywhere. Uh, and maybe you're right. Maybe Trump wants to do this ahead of the BRICS. But like I said, I don't really think it makes much difference either way. And do I think that there will be boots on the ground anywhere to support the dollar? I don't see that.
Yeah. Yeah. I was just curious to get your slant on that. But yeah, they're going to have to audit the Fed. And I don't know. I'm just not convinced that they have the gold there. We don't, like you said, there hasn't even been an audit. So I think 1956. So we really don't know what's been going on. But it's exciting to know that that's finally going to take place. It's certainly long overdue. This is sort of a play, Bill. This next question on a previous one I asked you. If the U.S. did revalue their gold reserves, what would that do? And if they actually did it, how high would they have to set the price on gold to make it worthwhile? And depending on that revalued price, wouldn't that cause massive inflation? What would that look like to the economy?
Uh, Revaluing gold, what that does is it will allow, uh, it gives them more collateral that they can borrow against and issue debt on. So
Mm-hmm.
what that does, that's going to that would theoretically juice the economy because you'd have credit, you'd have more credit more readily available. Um, as far as a number goes, I don't know. You could probably, in my opinion, I think a five-fold move up to call it 14, 15,000. Um, that would be the minimum that I think they would even make any sense. Because now you're talking about instead of 800 billion, you're talking about 4 trillion. So anything, $15,000 or higher, I think would be significant.
Yeah, yeah, absolutely. And it's just no telling, as you said earlier, how high it can go, what that number that they want it to be before it kind of settles back.
Well, John, one other thing.
Yeah,
There's can't really come up with a gold price because we don't have the numerator or the denominator. We
right.
don't know how much gold we actually is actually in the vault. We don't know
Mm-hmm.
how much of that gold is actually still unencumbered, and we have no idea how badly the money supply slash new debt is going to blow out. So we don't have either number. Um, so you really can't come up with a mathematical number with any type of certainty.
Yeah, no, you've said that. That's true. You've said that numerator and denominator in our past conversations. I do remember that. So it goes back to get your point about we have to really assess the true audit and then make a determination from there. So I guess that'll tell a lot of the story going forward. So thank you for that. Bill, the way it is all playing out seems quite orchestrated by the world central banks. For example, Basel III in 2019 makes gold a tier one asset, as you know. Then the price is suppressed until they can drain all the gold from the bullion banks, trying to convert all the worthless fiat currency into a real tangible asset. I guess the last step would be for them to revalue gold as much to a higher price, as you said, with an attempt to save themselves. It almost seems like a reverse Ponzi scheme whereby those that don't own any gold or can't afford to buy any gold are getting screwed by the global bankers again. What are your thoughts on that?
Yeah, that's logical. Um, yeah, they did make gold a tier one asset and understand that a tier one asset means there's no haircut on a bank's balance sheet when regulators look at them. In other words, in the past, if they had gold on their balance sheet, let's say they had $1 billion, they're only able to use 500 million of that or less as reserves. Now you buy an ounce of gold, that whole ounce of gold is on your balance sheet. So yeah, that's obviously a good thing because other than gold, what on a central bank's balance sheet cannot bankrupt. Everything else can bankrupt. I mean, they are the guarantors who guarantees the central banks. The only thing that guarantees central banks is how many ounces they actually hold.
Interesting. No, do you think the audit might have some determining factor on that as well?
Yeah, depending upon what we find out from the audit. I mean,
Hmm.
can you imagine what the world would look like 24 hours after the news hits that there's nothing but cobwebs? Or after the news hits that, yeah, there's 8,000 tons, but 7,500 of it has been already leased out. Uh, I mean, financial markets uh, will implode, explode, completely come apart at the seams.
Yeah, it's going to go sideways. To your point, I think you said that it doesn't matter which bank or institution gets hit because you said within 72 hours it's all going to affect all of them, right? Basically.
Right.
So
Right.
it's
I mean, it's one big it's one big orgy. It's one big financial orgy,
yeah.
and you've got infected uh, trading partners, and if your trading partner is infected, you're infected. So, uh, yeah, I mean, it's easy to see a series of dominoes falling, once derivatives blow.
Yeah, exactly. And I was glad, thank you, Bill. I'm glad you brought up about the world markets, excuse me, in response to that question I asked you, because that actually leads me to my last question for the day. I have to give full credit and disclosure to our mutual friend X22 for pulling this out. The London COMEX vault, as you know, has been found to be shipping about 8,000 bars of gold from their underground vaults, valued at about $252 billion. There seems to be a big concern about President Trump's trade war, particularly against the EU. They're shipping these bars sort of clandestine underground from London to New York. So my question to you, Bill, is, are they doing this because Fort Knox truly doesn't have the gold, or are they preparing to bring back the gold standard, or maybe a combination of the two?
Um, well, we don't know for a fact one way or the other on how much gold we actually have. Assuming we do have that gold and that the plan is to revalue gold, then it's just natural that you've got unloading of gold into the United States so that you have control or custody of it. I mean, part of the part of what's going on is you're seeing that it takes a week, 2 weeks, 3 weeks, whatever, to get bars shipped from London to New York.
Mm-hmm.
Once they're in New York, you can push a button on those, and the value is fully realizable at that point in time. If the gold is in London and you push a button, the button, it doesn't actually connect
Mm.
for a week, 2 weeks, 3 weeks until the gold actually gets here. So I think you're looking at onloading, uh, you know, unloading gold into the United States with probably knowledge that there's going to be a revaluation, reset, whatever you want to call it.
Mm-hmm.
Uh, but it's where the gold is domiciled in today's world, where, like I said, you can push a button and you realize the full value of that collateral. If it's in London, yes, it's collateral, but it's not collateral uh, that's good for immediate delivery.
Yeah. The other thing I was
Until
wondering,
it
Bill, in the
gets here,
back, I'm sorry.
you said until it gets here.
Yeah,
Once the gold is here, then it's available for immediate use slash delivery.
right. I was going to ask you on the backs of that, Bill, if you think it's possible that maybe the Treasury is intercepting that gold in New York and planning to do something, good with it, like potentially a gold standard.
Um, that's possible, but theoretically, we should be able to see that through either uh, the deliveries or through non-deliveries of people standing for gold. I think that's one of the big things they're worried about, is that the amount of contracts that are being bought up and stood for delivery after first notice day. That never used to happen. Now it's happening more and more so.
Mm.
And we got to get through February for gold, and then we got March for silver. So it's going to be interesting to see if all of these uh, flood month contracts, whether they all get delivered on or not, or whether we go through what we eventually will absolutely go through, which is uh, you know a defaulting delivery cycle, failure to deliver.
Yeah, which in and of itself, as you know, creates a reset too. So I'm glad you brought up silver, because I was going to ask you about that as a follow-up question. Do you think that silver will move up with gold and finally get into that three-figure range this year?
Um, Silver's going to catch up to gold. I'd be shocked if you didn't see uh, the ratio, a super move in silver, and watch the ratio come down to, I don't know, at least 40 to 50. It's at 90 to 1 right now. Historically, for hundreds of years, and even in the Constitution, you're looking at 15, 16 to 1.
Mm-hmm.
But yet in the marketplace, it's 90 to 1. So, I mean, if you're bullish on gold, you should buy silver. And I'm just saying that because if gold goes up, I mean, is the ratio going to go to 100 or 120? Or is it more likely to drop to 40, 50, 60? I think that's more likely is that silver gets revalued uh, to a more normal ratio number to gold.
Yeah, and as you've always said, silver is the key, especially for manufacturing. One other quick follow-up question I was just thinking about, Bill, and what you shared. I haven't heard anything yet, so I didn't know. I thought I would kind of check with you. Have they set a date to your knowledge of when they're planning to audit the Fed? I'm sorry, excuse me,
I
Fort
don't even
Knox.
know. Yeah, I don't even know that that's been decided on that they're going to do it. Uh, I'm I'm really glad that this has come up. I mean, this has been something that's been talked about since uh, Ron Paul back in the
Mhm.
1980s. Um, so I'm on one hand I'm kind of surprised that they even brought it up, but on the other hand, I guess they had to bring it up because if they're auditing everything, then what about the gold?
Right.
Um, I don't know. I don't see an upside to it. I see mostly downside. Because even if they come out and they say, yeah, we have exactly 8,174 tons, blah blah blah, and it's divided between West Point, Fort Knox, Denver, etc. Is that going to be believed? I mean, they could come out with that, and I would still myself be completely skeptical because then you got to ask, where how is the deficit, uh, the production supply demand deficit, how's that been covered over the years? What hoard did that come from? I
Hmm.
mean, the most likely hoard anywhere on the planet would be the various central banks.
Interesting. Well, we're going to have to just see how it all plays out, but certainly the Wild West times that we're in. Bill, as we close today, can you talk a little bit about your website, billholter.com, and people can find your work? And as always, last thoughts you might have for the audience today.
Um, yeah, you can go to my website, billholter.com, poke around up top. There's three or four or five icons, um, an interview. I put all my interviews and other people's interviews on one. Daily commentary. There's a prepper column. I would urge people to go back if you've read it already, gone through it, go through it again because you'll find stuff that you've forgotten. Uh, and I would just say, it's like I guess I sound like a broken record, but just be prepared in every manner, mentally, financially, socially, spiritually, physically. Uh, get yourself ready for a battle because a battle's coming.
Yep. And you're helping to help folks kind of get that mindset and that preparation in order. And we certainly appreciate that. Bill Holter, thank you for joining us as always. We appreciate it. We look forward to seeing you again soon. And thanks again. Have a great day.
Thank you, John. You too.